Hi, welcome to the Market Alert for Wednesday, the 20th of April 2022. So get your teeth in for this one. Bitcoin and big tech bounce as Bullard banter batters bonds, bullion and black gold. The headlines for yesterday. This man's words did a lot of damage yesterday, particularly in the metals arena, along with his chums from the International Mafia Fund. Global growth outlook has been slashed. Yeah, they're all blaming Putin, of course, fears social unrest and global instability. Social unrest is going to come as a result of food price increases and the lack of food. And obviously that's a global issue. And of course, continuing increases in prices globally. And of course, we've got the issue of the supply chain issues as well. The effects of war will propagate far and wide, adding price pressures, exacerbating significant policy changes. Of course it will. And crude maintains losses despite an expected crude inventory draw. That's because of what Bullard said yesterday, and like I say, the friends of the International Mafia Organization. And again, more on the supply issue as well. From China, concern is growing that the spread of COVID cases and city lockdowns in China will have massive downstream effects for global supply chains that could dwarf previous disruptions. We've never recovered from the previous disruptions, let alone those that are now being prepared down the line. News today, existing home sales at 3 p.m. for the US. A bit of a downgrade there on the number of houses being sold. But then we've also got G20 meeting all day today, so that should add a bit of volatility. Meanwhile, in the gold-silver ratio, this moving up sharply yesterday because the silver price was absolutely hammered to the downside by $1, which we'll look at in just a moment. And let's start off with the Dow. We'll start off with the daily chart of the Dow. We had really bad news yesterday for the metals, growth cut, social upheaval, etc. Global disruptions in supply chains, and the Dow went up 500 points, which is quite amazing, isn't it? Well, it's not if you've been trading the markets for some time. We'll see if the market holds today, but it's doing its best to try and move back to the upside, which we've seen for the last few weeks. It's still stuck in this sort of sideways range, needs to break out one way or the other, but at the moment it's looking like the upside unless we go back to this today and maintain this sideways move during the current war with Russia and Ukraine. That seems to have gone fairly quiet and dropped off the radar as well. The daily ceasefire news seems to have disappeared as well. But yesterday you can see the IMF's comments. They had a positive effect on the stock market with the Dow moving up 500 points in the trading session before running out of steam, sideways on the overnight, really sideways actually. And at the moment it needs to get back above yesterday's close and the high in order to break out in the daily chart and get above that 200 MA that we can see there as well. In the German DAX, a similar picture, if I can find the chart, and here we go. This also moving higher yesterday, also overnight. You can see prices still looking bullish above the 5-bar moving average. Got to take out the 20 and the high to the left and the 50-bar moving average as well. And in between all of this, we're going to have some fibs as well, just to show you that the 62 ties in with the 20-bar moving average there and also the resistance to the left. So an interesting area there of 14,328. Watch this area. Otherwise, we could do exactly the same where we've got this sideways move here where we'll just retest back down to the 62% retracement. This main one here, but of course there are other ones in between here which I've not drawn in, but you know, if we get down to this line, we'll know that we've double bottom gone through the 89. But at the moment, the market's looking like it wants to head up to the upside, where we've got all of this other resistance to get through. Look at the 30-minute for yesterday. A bit choppy to start off with as the market tried to find its feet and then eventually broke to the upside after finding support at the S1 and being oversold. and then it just maintained the up move all the way through yesterday as it followed the Dow. Overnight, quite an interesting trading range there as well. Also back, the Dow isn't back above the close, but we are back above the close in the DAX. And yesterday's high is very close indeed. So 7 a.m. could see the market just go straight through the high of yesterday's trading session. In the 5-minute chart, you can see how choppy it was. Let me just move across a bit here. The futures market moved higher, and then we had a sell-off in the cash market, trying to hold at the DP, but couldn't get back above these averages or the DP and had to capitulate, trade down to the S1, where we can see the market's oversold, but the momentum shifting, divergence, got the volumes, and then the market moving back. And you can see we've traded back 89% here. And this was Monday's close on the electronic market, back down to the S1, and then prices drifting back to the upside until we got to the US Open. Oversold here, and the market then just moving to the upside and then just continuing through the evening, following the Dow, and then overnight, as you can see, the market at the moment already starting to prime itself to attack the high of yesterday. In the currencies, the yen had a bit of a breather overnight, but yesterday continued to storm ahead. Let's just look at the 30-minute chart of this. You'll see that it's continued to move up. The pound gaining on the yen weakening, all sorts of problems in Japan. The market back down to the DP, oversold at the moment, and just bouncing off here. Need to get through yesterday's high. But don't be surprised if you see further intervention by the Bank of Japan to try and support the yen. The pound also finding a bit of support yesterday as well. The US dollar showing a bit of weakness overnight. It's got a lot to do to move to the upside. Bailey didn't do anything with regards to interest rates yesterday, which is interesting. So inflation is going to continue to run rampant while they sit back and just watch it. I think they're just hoping that it's going to go away. It's going to be transitory, and all things will return back to normal. But that's wishful thinking on their part. But the pound's certainly starting to look a bit bullish there. We'll have a look at the dollar index in just a moment. In the 30-minute chart yesterday, the market moved higher, then came back, and then put in its retracement, which you can see there as well. And then off it moved overnight up to yesterday's high, where it's found a bit of weakness at the moment. Needs to stay above the DP for yesterday if there is any pullback in the pound. And finally, silver hammered yesterday, down $1. High volume. We are overbought, like I said before. Expect the market to retrace back down to at least 24.30 or 24.06, where we've had the last area of support here. They'll do whatever they can to get the market down. It's good news in the sense that it's still half price of what it was in 1980 and 2011, which is incredible when everything else price-wise has gone through the roof. But there you go, we know the story. So stuck yesterday. At the moment, finding a bit of support at the 20-bar moving average, but don't expect this to hold when we get to the London fix, because this is the IMF statement. We were doing really well yesterday. IMF said, sorry, global growth, we're marking it down, and we're going to see social unrest, supply issues, global problems, and policy changes. Sorry about this, but we're just going to hammer the price of silver down, if you don't mind. And that's exactly what they did. You can see the market already at yesterday's low. It looks as weak as a kitten, doesn't it? So for me, we're going back down to 24. Give them today the opportunity to carry over yesterday's news and hammer it down from the LBMA 1 p.m. fix. They're not worried about it going up because they'll just come in and crush it at 1 p.m. And meanwhile, the dollar heading back to that 78% retracement in the monthly chart. But in the daily chart, let's just have a look. You can see there's some supply for yesterday pulling back a bit, and that's the only thing that's holding the silver price at the moment. But if that reverses, then silver will move lower. And crude oil bouncing off yesterday's low. Only came down to 106 yesterday, didn't it? What was the low? Yeah, 106 there, you can see it. So we're holding way above the $100 per barrel level. And overnight doing the same as well. We're going back up, we know we are. This isn't over, we're just in the calm before the storm period again. So yeah, dollar still got to go up to 103, which I have no doubts it's going to. It's just a matter of time before it does that, and this again will allow the metals to get crushed back down to these levels, which it's amazing. The physical market is actually drying up. Very difficult to get hold of metal. I tried to buy some the other week and ended up buying bars as opposed to coins. And yeah, very difficult, and got premiums on it as well. So there's a complete disconnect from this market, the paper market, to the real world market. And everybody who is in this sphere knows this is the case. But again, we're at the mercy of the banks, I'm afraid. Anyway, that will do it for this one. If there is anything else to report, I'll let you know. But otherwise, as ever, thanks for watching. See you in the next one.